Hi Trader, Tina here once again from ShortMeTina.com with a recap. I think the last recap that I did was in the beginning of February. So let's just kind of like close things out by doing a video the last day of February heading into March, which will mark the last month in the first quarter 2021. Anyway, so what I'm going to try to do, and hopefully it actually gets done, is I'm going to try to do for the month of March, one video a day. We're going to call it the March Blitz, outside of the weekends because the equity market is not open on the weekend. Anyway, let's just kick it off with so root for me, right? Root for me. Let's hope that I can actually get it done. One video a day for the month of March Blitz. Anyway, this is the SPY weekly chart going all the way back to 2009. So right now, in my opinion, we are in this multi-11-year bull market, right? We're above this 2009 trend line you can see here, and it's a reliable trend, right? The more times it touches a point, in my opinion, the more reliable the trend line is. You can see it touch it here, 1, 2, 3, 4. We can call that 5, 6, 7. We can call this 8. So a lot of times, right? And then in 2020, right? This is the pandemic here, this free fall here, the pandemic. We kind of blew through the line, but we quickly kind of rebounded and got right above it. So for me, trend line still intact, multi-year bull market. So the next line you see here is a measurement from when we actually crashed, right? That point where we actually rebounded up until now. So how many points have we touched here? 1, 2, 3. If you look back to the video that I did in February, the early part of February, I said, well, I am relatively cautious because, again, everyone sees different things. What I'm seeing right now, again, on the shorter time frame, not this longer trend line from 2009, but from the 2020 bounce till present. So about a year, I see an inverted cup and handle, which is relatively bearish. It didn't break as of yet. So heading into tomorrow, we can definitely still catch that bounce, right? We can catch that bounce and go on to around 430, 440, which is the upper part of this trend line. Or we can actually crash. I don't know, hence why I am cautious, hence why I've respected my stops in the long positions that I've taken, hence why my equity exposure is not that much, because in the event that we do crash, I don't want to be exposed on the long side in an uncomfortable way, right? So again, I don't know what the market's going to do. Hopefully we kind of, even if we sort of breach through this line, let's call that around 380, even if we pierce through 380 and we rebound, that's positive in my opinion. But if we crash and cannot get back above, right? If we crash, there's a possibility that we crash all the way to around that 330 level, and an even more sinister pullback can get us to that initial breakout, which we took a long time to actually get past, of around 300. So a couple of scenarios, we can sort of fall through 380 heading into Monday next week. We can get to around the high 360s, 370s, rebound, get back within this trend, which would be positive in my opinion. And then I would start putting on more longs because at that point, I think the market would go higher. We can possibly see beyond 400. If we cannot rebound and get back into this line, one scenario is us getting to around 350. A more sinister scenario is us getting to around that initial breakout base of around 300. So let me remove these lines so you can see it here, make it a little clearer. Even go back to candlesticks versus the line. Let's reset this chart here so you can see. And this goes back to around 2018. So 2018, it took us about a little over 2 years to sustain that break, right? So 2018, 2019, we broke above that 300 mark, right? We went as high as around 340, couldn't sustain that first breakout, and so we pulled back. Then we second attempt at that breakout, June of 2020, we actually but we maintained that break, and now we're seeing, right, in real time whether or not that break can be sustained. To be continued, I don't know. But for me, next week should be very telling, right? Hope that makes sense. What else? All right, we have Spotify. I like to trade these sorts of charts. They're relatively, I don't want to say easy, but they're relatively easier to trade. You can see here, right? It's a daily chart going all the way back to 2018. So about 3 years of data. You can see we were cycling through this channel here. We broke through, mini channel, breakthrough, another channel, breakthrough, another channel. And so how you play that is you want to buy support the lower end of the channel, and you can let go or go short at resistance. So for me, being that we are in a bull market, a multi-year bull market, I'm not really that big on shorting when it gets to resistance, although it can be a viable strategy for many. It got a little tricky here, and I'll be honest, I got stopped out of this trade, right? And these things happen. So again, you had the channel, we had the breakthrough with confirming volume right here, that long green candle, and then we started to base here. So you could have done two things. You could have gone long anticipating the breakout, and it did break out, right? We broke out of that channel, we pierced that, let's see, what do we want to call that resistance level? Let's call that resistance level around 355. You can see we pierced through that 355 level right here, denoted by this red line. We went as high as 387. That was the high, I want to say on, was it Monday? Right, 387.44 after breaking above that 350 to 355 ceiling, and then we pulled back. So if anyone tried to play the breakout, they would have gotten burned because it didn't sustain that breakout. Now, sitting here at 307.38, we're right by that support area, which, if you look back, going back to December of 20, about north of 3 months, it's been sort of like a good area to go long. So I got stopped out, right? I bought anticipating the breakout. It broke out. I was in profit. I didn't take that profit, obviously, because I was expecting it to go higher. It said, no, Tina, we're not going to sustain this breakout. And so I kind of stopped once it kind of fell through that 355 level. So sitting here right at support, 307.38, I wouldn't necessarily think that that's a bad place to go long again to try this trade once more. However, oftentimes wherever the market goes, so goes your stop. And so if tomorrow we actually, if you go back to what I talked about in the SPY, if we actually break down that line, and the market turns bearish, chances are it's going to take Spotify along with it. So before I get back into the Spotify trade, I need to see how the market is doing overall. All right, what else? All right, my baby, my darling Snapchat, once again, back on the agenda. Love the trade. You can see here, IPO'd in 2017, crashed for a couple of years, found ourselves right back to where we started late 2020. So about 3 years it took us to get back to that high, that IPO high of 29.44. Like, these dogs are having a good time. Cut it out, guys. Cut it out. Sorry about that. Anyway, rounding bottom here, you can see we broke out with volume, and Snapchat has done nothing but go up. We closed at 65.66 on Friday. We went as high as 73.59. Considering that I went long, I think sub 10, you think that I would be taking profits around 73, but I am greedy and I have not let go of any of my shares. I like why was I going to say Snapshot? I don't know. I like Snapchat. I could definitely see this getting to 100, north of 100. With a continued bull market. So I'm going to hang on unless the entire market turns incredibly bearish, but we're still in a bull market in my opinion. And while we'll have, those 5-10% pullbacks, as long as that longer term trend line remains intact, I'm going to hold on to these stocks that have been showing me extreme profits. And again, being in around sub 10, I still like it. I'm still going to hold. So I still think anyone willing to jump in at this point, if you can hold on and ride sort of those waves, I think it'll benefit you in the long run. What else? All right, and so let's wrap it up with silver monthly chart. Closed at was that the close? I don't think so. Yeah, closed at 24.66. You can see here. I thought I thought silver was breaking out here, right? Going as high as north of 28. Similar to sort of the okie doke in the SPY or spot or even snap. It breaks out to then pull back. But even sitting here 24.66, I don't think it's sort of like a bad entry point. I'm going to wait to see if it can pull back to its original breakout base here of around 1920. If it can get to 1920, I think that'll be a good area to go long. Or if it gets above 25 and can sustain that break, I also think it's an area to go long. Let me look at the line chart and show you. You can see here, boom, we got close, right? 26.23. So that's that area that I'm going to be paying attention to. So we got there and then we pulled all the way back. Try to do it again. No cigar, close but no cigar. So if it pulls back to like 1920, I think that's a good area to go long. Obviously, I'm going to be paying attention to, let's see if I remember where these symbols are. Does this make sense? Yep, I'll be paying attention to here. Sort of that 46, 47 area. So a bit of upside. I definitely think silver is going to break out. Not right now. If it pulls back to 1920, that's where I'm going to go long. I hope that makes sense. It's only 4 stocks, but considering I'm going to try my best to do one video a day for all of March. We're going to call it the March Blitz. Let's see if I'm successful. Root for me. So we're going to cap it there because my dogs are having a good time. And I don't know what they're trying to tell me. I don't know. They're not bothering anyone. They're playing with themselves. Or with each other, rather. So, yeah, let's cap it there. Tina here, once again from ShortMeTina.com. If you like this video, do me a couple of favors. One, definitely give it a thumbs up. Comment in the comment section, even if you agree with me or not. Or let me know some of the stocks that you're paying attention to. Maybe they're lost on my radar, and maybe it should be on my radar. So definitely in the comments section, let me know what you're paying attention to. Also, that free trading course that we have up on our website never went away. It's still there. So if you're new to the market, I know there's a lot of new players in the game. If you're new to the market, I've been doing this now for about 20 years, maybe even more. I've learned a lot of things. I've lost money. I've made money. Some timely lesson things that have helped me remain consistent for the last few years. And I share some of that in that free trading course. We don't ask for your credit card or any kind of personal data. The only thing that we ask for is an email address. So if you want to receive some of those timely lessons, definitely head on over to our website, ShortMeTina.com, and drop us with an email address where we can reach you. All right. So tomorrow we're going to start with that March Blitz. If that makes any sense, let's start with that March Blitz. Let's see if I can do a video a day. Talk to you soon. Bye.